Hello guys, this is Mr. Ibrahim the trader of Gova Trading Academy. So let's continue from where we stopped on the previous video. Now we are still on the psychological lesson. Okay, we are still on the psychological lesson. Now this is another example of what we call the psychological level, psychological location. Okay. Now, do you notice that we have a bearish candlestick here? Let's say, for example, this area has not happened yet. Let us assume that this area has not happened yet. So if it has not happened yet, what can you see in the area as an order flow trader of the pro course? What you can see is we have a very good bearish candlestick here. Hold on, let me erase it. It is looking too big. We have a very good bearish candle here, and what we usually do on a bearish candle is we usually mark out the supply of the candle. We usually mark out the supply of the candle. So let's say, for example, you happen to mark out the supply of the candle like this. What else do you need to confirm after marking out the supply of a candle? Because after marking out the supply of a candle in a sell trade, the next thing you need to identify is that your sell trade sitting on a very good higher time frame psychological locational level? For example, you can see here on this trade, if I look to what happened previously, I can see that market rejected this area previously. Market came here, rejected this area. Market came here, rejected. Market came here and rejected this area. So market has been rejecting this area in the past. In the past, market has been rejecting this area and the market is selling off. Market is coming back into the area, selling off. Market is coming into the area and selling off, selling off. So market came back to the area here again and also sold off. So definitely, if markets come here again, we are expecting market price to do what? To sell off, to sell off. Now, don't get it twisted that market must sell off 100%. What I'm telling you guys is we have 80% chance. There's 80% probability. I believe you guys know what probability is. We have 80% and then we have 20%. We have 20%. Now you can see what I mean. What I mean is when price came back into this level, let me repeat the video again. Let me repeat it for those who are just joining. Now, this is another example on psychological locational level, okay? Now, let us assume that this area has not happened yet, guys. So let us assume that this area has not happened yet. As at the time of the analysis, this area has not happened yet. So this area has not happened yet, even though it has happened right now, but this is just an example I'm trying to show you guys. I believe you understand. Now, remember, on a normal analysis matter, we usually do what? Whenever we see a bearish candle, we usually mark out the supply level of the candle on the D1 time frame. So let us assume that this is me marking out my proximal line and distal line on the D1 time frame right now of the bearish candlestick. Now, after marking out your proximal line, distal line, roughly on the D1 time frame, what you need to also consider is this sell trade that you have is the sell trade on a very good psychological locational level. Now, by doing so, you need to consider it looking at the left side. Now, by looking at the left side to see what happened previously in the past, you can see in the past, markets came here and rejected down. Markets came there and rejected down. Markets came here, rejected. Markets came here, rejected. Markets came here, rejected, rejected. There's a lot of rejection whenever market price come into this level here. So whenever markets come into that level, markets usually reject and sell off. So does it make sense that if market price come back into this zone again, does it make sense that if market price come back into that zone, market is going to reject and sell off again? Or is market price going to buy? Is market price going to go up and buy? Which one should you follow as a trader who is using his sense, who is using his senses? What should you follow, guys? Hello, guys, what should you follow? This is a question.
Hello?
We should sell.
What should you follow? Should you be selling or should you be buying? Should you be buying or should you be selling?
Of course, selling.
Sell it is.
Of course, it makes sense for you to be selling because selling has more higher probability. You can see that I'm very careful of what I'm telling you guys, isn't it? What I'm telling you guys here is that I'm trying to prepare your mind whenever you're analyzing the market. I'm preparing your mind in the sense that don't think that market is going to play out by selling in that area 100%. Market is not going to when markets come into a psychological level, it is not necessary that market is going to play out in that area 100%. No. What I'm trying to tell you guys is we have a higher probability. I believe you guys know what probability is. We have a higher chance. There's a higher chance that market is going to come here and sell. There's a higher chance, which is about 80% chance. But there's a lower chance that if markets come here, market is going to break out and buy. The chance of market buying in that area is very low. It is about 20%. So which one should you be following as a very good trader who is using his senses? A trader who is using his senses should follow what 80% is going to happen in the market, because you guys, you can see clearly that whenever market price come into this level here, market price usually rejects the level whenever markets come into the level. So what if market happens to come back into the level again? You should expect that market is going to reject the level again. It makes sense that way. It makes sense that way. So it means that if you are following what is going to happen 80% of the time, and it later did not happen, you should be fine. You should be okay with it. Okay. So sometimes you might hit stop loss even after following the 80%. Sometimes you might hit stop loss even after following the 80%. But have it at the back of your mind that it is going to favor you a lot if you are following the 80%. It is going to favor you a lot if you are following the 80%. That is what it means by being a very good risk management trader, a very good trader who understands risk management and knows how to follow rules and regulation in trading without having any emotional attach in, or without having any emotions involved, You can see when markets came into this supply of this candle, you can see how market rejected again, market rejected and did what? And sold off. Market rejected and sold off. You can see how good it is to follow 80%. You can see how good it is to follow 80%. See how good it is to follow 80%. Now, this is my point here, okay? This is my point. So I believe by now you guys understand what I mean by psychological level on the higher time frame. Psychological level on the higher time frame. So any question on this psychological level now? Any question? Do you guys have any question on this?
No, sir. My side is clear.
You can see
Thank you.
this is another example here. Hold on, guys. This is another example. On this example, you can see that we have a bearish candlestick here, right? This is a bearish candlestick. We all know how to mark out the supply of the candle, the supply of the candlestick. Now, do you know the reason why this area happened to play out and sold off as expected? It is because on the left side, markets usually reject when price come back into this area. Market has been rejecting the area in the past. It is a psychological selling area. It is a psychological selling area in the past. Where whenever markets come into that area, market usually rejects. That is why, again, when markets came into the area again here, market rejected and went down. Market rejected and went down. So you need to know how to do this analysis. It is very simple. You just need to know how to do what? You just need to know how to train your eyes. You just need to know how to train your eyes. So any question again? Yes, any question? Hello, any question?
Sir.
Okay.
Sir. Hello, sir.
Yes, Mamun, yes.
Sir, can you open CAT CHF chart?
Hold on, before I open any, I'm asking about question. Do you
Okay,
have any
sir.
question?
No, sir.
Asui, do you have any question, Mr. Asui?
No, sir, it's very clear. I saw where I made a lot of my mistake because I hit 20 stop loss this week, but I understand why now.
All right. Madam K, do you have any question now? Any question?
No, thank you. I understand at the moment.
Madam Uzioma, any question about psychological level?
No, thank you, sir.
You can see this is what I mean by psychological level again. Another example. Market has been rejecting this area in the past. Market has been rejecting this area in the past. In the past, market has been rejecting here. Now, do you understand that this is the demand level of this candle, isn't it? Now, you see how
Yes.
market came back to that area and did what? Respected that psychological level that we have in the past. Market has been, so you guys need to know how to play with psychological level. You guys need to know how to play with psychological level in a sell trade or in a buy trade. It is going to help you guys a lot in your analysis. So that is one of the mistakes you guys are making. That does not mean, remember guys, I'm trying to make sure that you understand what is wrong from what is right. Remember, even though I told you guys that it is the right thing to do is that a candle should be, your zone should be sitting on where? At the opening of the candle, just like this, isn't it? I told you, I tried to let you guys know what is right from what is wrong. And from what is wrong, you can slightly do what? Sometimes you can do what?
Compromise.
You can compromise a little. You can compromise a little. It depends on the situation. It is not every situation you need to compromise. There are some situations that you don't have to compromise. You have to totally ignore them. You have to totally ignore it. Now, you see here, I told you guys that in a very good trade, a very good trade should be sitting at the demand of the candle. It is a very good trade. Now, it happens that that trade does not, let's go to gold. I think I have a very good example in gold. Let's go to gold. Now in gold, remember, let me erase this area. Hold on, guys. Let me reset the chart. So let me analyze the previous month. That is where I'm showing you the example on the previous month. On the previous month, this is our monthly equilibrium line for the month of October here. Now H3 for the weekly trade. Now the weekly trade before November opened, before the month of November opened, I believe you guys saw me taking this trade on gold. I sent my result on this trade on gold, right? And some of you are asking me the question, why did I take this trade? If since the trade here is sitting on the body of the candle, because I'm a professional trader. I know how to compromise in some situation. I know how to compromise in some situation. And the reason why I'm compromising here is when I switch to the D1 time frame, you can see that the zone is sitting on the body of the candle, which is not right. It is not right for me to take a trade that is sitting on the body of the candle. Can you see that? But what if I do it like this? Let us do it like this now. Let us do it like this. So this is the right area where to mark your demand zone. So let us switch to a lower time frame now to see where that area is sitting on. Now, does it make sense for me? Does it make sense for me to mark my proximal line, distal line in an area like this?
No.
It doesn't make sense.
No,
This is not a zone. This is not a zone. The zone is where? The zone is not below.
Above.
The zone is a little bit above. The zone is a little bit above. That is why I did what? I was able to compromise. Since I know that the zone was not the one below, the one that is very confirmed to be a bank movement is above. This is a rally movement, a very strong rally movement. It is above.
Okay.
So I believe you guys understand what I mean by compromising. If you are compromising, it means that the zone below is not a good zone. The zone above is the one that is good. That is the only reason why you are compromising, because that is the only zone that makes sense. The one below does not make sense. The one that is at the wicks of the candle, the zone that is, this area is at the wicks of the candle, isn't it? Of the candle. Isn't it, guys?
Yes.
But this one here is on the body of the candle. This one here is on the body of the candle. So shouldn't I compromise the one that is looking good and representing big band formation, even though it is sitting on the body of the candle? I can do that. But even though I'm doing that, I'm going to make sure that my zone, that zone is not sitting in the middle of the candle. Because if I happen to have my zone sitting on the middle of the candle, body of the candle like this, it is not good anymore. You understand? It is not good. At least if the demand zone of the candle is not good, at least your demand zone should be very close to the open of the candle. Remember, I told you can take something like this. It is very close to the open. This is also okay. It is very close to the opening of the candle. It shouldn't be far away from the opening of the candle. Anything far away from the opening of the candle does not make sense. It is not good, okay? So just make sure you understand that. I think that is it. That is it on this gold. So I believe you can also see that this is a psychological level for what? For demand. Market has been rejecting this area in the past. Markets came back into that area again, rejected the area again. And also the structure is very simple. The structure is like this, like this, like this, and like this. Market gave us another structure here like this, like this. So what are we expecting again in the future? In the future, we should expect markets to do like this and like this. That is how market works. You need to understand the structure of the market. You need to understand the structure of the market and so on. So let's move on to the other pairs. We've analyzed AUD USD. We've analyzed USD CAD. So let us check the other ones that we have. Now we have euro card. Let us check euro card. AUD card first. Let us analyze AUD card. Now on AUD card, this is the area on AUD card. So as at the time of the analysis, the market was giving us a buy alignment. As at the time of the analysis, market was giving us a buy alignment because as at the time of the analysis, this area has not happened yet, isn't it, guys?
Yes.
Yes, sir.
Yes,
As at the
sir.
time of the analysis, market price was around here, which means that our blue line is below, our green line is far above, which means we have a buy alignment. We have a buy alignment. In a buy alignment, we look at the D1 time frame. Let us see the candle, bullish candle on the D1. Now, the bullish candle on the D1 that we have was this bullish candle here. Then I saw you guys marking out the demand of the candle. Now, by looking at this information, is this candle sitting in a, does this candle have a psychological level in the past?
No.
If you look left, does it have any psychological demand level in the past that whenever price is coming into that area, market is buying? Whenever market is coming into that area, market is buying. Does this candle have it? It
No.
does not. It does not. The candle does not have it. It does not have it. You understand? So you need to, that is why you need to know how to ignore some zones. You need to know how to ignore some zones. You need to know how to ignore some zones. So that is it on that trade. Let's move on to the other trade. I believe the question on this trade has been answered, right? AUD card.
Yes, sir.
Let's go to card CHF. On card CHF, this is the situation on card CHF. Monthly EQ is here. Weekly EQ is here. So we have a sell trade alignment. We have a sell trade alignment. Okay, as at the time of the analysis, we have a buy alignment. As at the time of the analysis, isn't it?
Yes, sir.
Because as at the time of the analysis, market price was here. Market price was here as at the time of the analysis. So let's look at the bullish candle. So you guys happen to mark out this bullish candle here, right?
Yes.
Now, I'm not seeing any psychological demand level on this candle. The psychological demand is a little bit below. You understand? It is a little bit down below. It is down below here. You understand? We don't have any psychological level around here. It is not there. Do you understand?
Yes, sir.
It is down below because down below, we can see that whenever markets come into this area, markets reject the area. Market usually reject the area. So if markets come here again, we can expect market to reject the area again. So that is what psychological level is all about. Now let's check on, I believe this question has also been answered on CAC.
Sir. Hello, sir.
Yes.
Sir, can you switch this pair 3 hour time frame, 3 hour CAT CHF?
Yes.
Sir, when I mark the monthly equivalent line and weekly, so I see here the, both are very close. So I ignore this.
Yes, if both are very close, I told you if both are very close, because this is where the weekly is. This is where the weekly is. This is where the weekly equilibrium line is, right?
Yes, sir.
And remember, I told you many times that if the blue line and the green line are very close to each other, we don't have any significant gap between these two, then ignore the trade. Ignore it. It is not a good trade. Ignore it. You understand? You want to see a good trade. In a good trade, you want to see what? You want to see a reasonable gap. between the two. Now, you might ask me, because I have some of you asking this type of questions, you might ask, Mr. Ibrahim, then how can we measure the gap? How can we measure it? Now, you cannot measure it, you understand? We cannot measure it. However, you can measure it with your eyes, roughly with your eyes. Now, does this make sense in your eyes? Or does this make sense? Which one makes sense more? Which one makes sense more? The first one or the second one? This one or this situation? Which one makes sense more? Which one is more better? Huh?
The second one.
The small is
Second
better.
one is more better. The second one is more better. This is not better. This is not better. This is not better. This one is more better. This is more better. This is more better. So you can see we don't have any measurements that we use. However, with your own eyes, with your eyes, you should be able to understand what is better and what is not better. You should be able to understand that. You should be able to understand what is better and what is not better. Because with your experience, with time, it means that how to know what is better and how to know what is not better happens to be with what? With your time and some of the experience you might be having in the market. You understand? With your experience in the market, you should be able to understand what is better and what is not better as time goes on. I cannot teach you that. I cannot teach. It is something I cannot teach. I cannot teach you. You understand? So that is it. That is it. That is it. So Mamun, do you have your answer now to that question?
Yes, sir.
All right, let's move on to EuroCAD. On EuroCAD, this is what we have. Monthly equilibrium line is here. On EuroCAD, monthly Q is here. And this one, weekly is here. Weekly is here. So weekly is here. You can see that we don't have any gap between these two. There is no gap between the two. So I don't see any reason why you should be taking this, since there is no gap between the two. Because as at the time of the analysis, this is what you have as at the time of the analysis. So there's no gap between these two lines. You should be ignoring the analysis, but you happen to take it. It means what you are taking was a bearish candle. So let us look at the bearish candle you are looking at. Let's see, which bearish candlestick were you looking at? Let me see the date on last week. Let me see the date first. Last week was on 03. So let me see the candle for 03 here. This is 02. Okay, this bullish candlestick, as you can see, this is 03 Friday candle. This bearish candlestick here is Thursday's candle. So let us mark out the supply of this Thursday's candle here. So it means that you are trying to take this trade here. You were trying to take this trade here on EuroCAD. This is the zone you are trying to take. Now let's go back to the D1 time frame again. Now I don't see any psychological level on this candle. There is no psychological level on this candle. You can see this candle, when you look left, when you look to the left side, market rejected this area just once. Market rejected that area only one time. One time is not enough. You understand? You have to see series of rejection before you can determine that that is a psychological level of where the market is playing out on. You understand? There has to be a pattern. There has to be a behavior. You understand? Can you predict what is going to happen with just one behavior? You cannot, but you can predict what is going to happen with multiple behaviors. Do you understand what I mean? You can predict what is going to happen here just by looking at the multiple behaviors that has happened here. You should be able to predict what is going to happen. You understand, isn't
Please.
it? But
Please, coach.
hello, is that
Yes,
sir.
correct? Is that correct?
Ah,
Yes,
yes, sir.
sir.
But does it
I
make
have
sense?
already.
Can you predict what is going to happen here with just one behavior? You cannot. You cannot. You understand? You cannot. You cannot. So you have to see multi before you can start considering a psychological level. That area must have played out in series of time before you can start considering that area as a psychological level and so on. You understand?
Sir, hello, sir.
Yes.
Sir, here you marked the zone. Can you please check previous candle? I see market already shift the sell element to buy element.
Which one?
Zoom in, sir. Yes, sir. Sir,
No, as at the time of
CCAP.
this analysis, this analysis was a cell alignment. This analysis was a cell alignment. Last week, this analysis was a what? Cell alignment. Okay.
Okay, sir.
But let's see
Hello.
what is happening this week. Let's see what is happening this week. This week, as you can see, this is the monthly EQ. The monthly EQ is on the D1 time frame here. Let's see the weekly EQ. The weekly EQ is currently above here, which means that the green line is currently here right now. Since today is Thursday, it means we can start analyzing what is going to happen in the market next week. So we have the green line above, and then we have the green line below. That is a buy alignment, isn't it? That is a buy alignment, right?
Yes, sir.
The buy alignment, we look for the D1 candle on the time frame. Then this is the D1 candle, right?
Yes, sir.
Now, is that candle on a psychological demand level? Is this candlestick on a psychological demand level? That is my question.
No.
I think
No.
it's not work. Yeah,
It's not, this
because
candle is not in a psychological demand level. It is not in a psychological demand level. So you can see you have to ignore it. You have to ignore. Okay. So that is it, guys. That is it. Any question? Any more question? Do you have any more question,
Wait.
guys?
See. Hello.
Yes.
My language not
Please
too.
just speak out the way you understand. Just speak it out.
Okay. A reason why I want to ignore this trader before
Yes.
the D1 candle this week is too much. The reason why I will ignore it. A bearish candle on the previous week.
Okay, I understand what you are saying. You do you mean that the bullish candle is too much? The bullish candle here is too much? Is that
No. This week, the week of the bearish candle.
This is remember, this is a buy alignment. This is a buy alignment, right? So in a buy alignment, we are looking for a bullish candle, not a bearish candle. We are looking.
No, I saw it the preview weeks.
Okay, the previous week.
Yes.
Okay.
The bearish candle which you relate.
This one.
Yes.
Yes. So, but if you notice on the candle, the reason why you need to ignore it is because this candle does not have a psychological level. Okay, it does not have a psychological level. That is why we are ignoring it. Okay.
All right.
Remember, I told you what a psychological level is. A psychological level is an area whereby market must have been. Hold on, look at it. You can see this is a psychological selling level here. You can call this area psychological selling level. Do you know why? Reason is because whenever markets come into this area, market reject and do what? Go down. Market reject and do what? go down. Market rejects and do what? Go down. Market rejects and do what? Go down. Market rejects and do what? Go down. You see, market came back again here, rejected and did what? Go down. So you can see, if you have, this is a good candle, you can see this is a good bearish candle, right? We have a good bearish candle here, isn't it?
Yes.
After having that good bearish candle, you've already confirmed that this is a rejection area on in the what? In the past. That is a good psychological level that market has been behaving in the area for sell. Whenever markets come into that area, market behavior is just selling. Market behavior is just selling around there. Whenever markets come into that area. So look at it. What if you happen to mark out your D1 demand zone, D1 demand proximal line? You can see that if you happen to mark out your D1 proximal line, market happens to respect what has been happening in the past psychologically. Market came there and did what? And rejected in profits, isn't it? That is because there was a psychology in the past. Can you see? There's a psychology of that happening in the past. Do you understand what I'm trying to say, guys?
Yes, sir.
So you guys need to know how to take advantage of the psychological level. Don't be in rush. Don't be, if you are a trader who only rush to the market to make money, then you cannot make money in the market. The way you rush into the market to make money, you are trying to rush into the market to lose money. You are not going to be making money at all. The most profitable traders are the most what?
Patient.
Big banks are the most patient traders out there. After big banks, then any profitable trader you see is a patient trader. Is a patient trader. No matter how knowledgeable you are in the forex market, if you don't understand how to be patient, then trust me, you cannot be profitable. There is no two ways about it. You cannot be profitable. You cannot be profitable in this business if you are not patient. And if you are a trader who wants so this class is going to end in 1 minute. If you are a trader who wants to be taking trade every single time, you don't want to be missing any opportunity, then you are not going to be profitable. So since you cannot filter how to take a good trade and how to take a bad trade, since you cannot filter how to rest and how to know when to trade and when not to trade, if you don't know how to do that, you cannot be a profitable trader.